A price movement can be likened to the movement of a train. A train moves on a rail track. Similarly, price as well moves on a track. And whenever a train moves, it moves from one station to the other. So in trading, price also moves from a zone, which we can also call a station. So it can be from zone A to zone B, from zone B to zone C. And what that means is that it can take off from station A to station B, from B to station C. So if we know the track and the linkage of the track of a train from one station to the other, it means we can predict the next destination of that train. So the same thing is applicable to chart. If we know the track and how price moves from one place to the other, we can easily predict the next destination of where the price is moving to. Thank you to all our new subscribers, and you're welcome to Royal Forex Academy. In this video, we are looking at entry and exit strategy using our trend line on the 50-minute time frame. So we'll mark our support and resistance, and this support and resistance is what is going to act as our station. So having established this, what I've marked here are my previous support and resistance, and this is H1 time frame. So if I'm to connect my trend line, this is point, this here, and then I have here, here, and here. So it means my trend line will be looking like this. So here is my trend line being connected. Oh, and if you look at this carefully, you will agree with me that it looks more like a rail track, because this is exactly how a rail track looks like. So price take its journey from here, and the next thing is from station A, you see the price move to station B. And look at what happened. It left the station B and then it moved again to station C. So now, how do we know that there is a tendency of price movement from this station B to C? Because first of all, at the initial stage, price has moved from this station to this particular station. And when price get to this station before, it returned from that station back to this other station. So this now gives us an idea that, oh, price has a station here. So when it takes its movement from this zone, it's actually going back to this station. And when it leaves this station, it's going to come back to this particular station. And another confirmation is when price begin to approach this station, we begin to look for a signal. And one of these signals is exactly what happens here. That here is a low, a higher high, and this zone is a higher high as well. And if we connect our trend line to this zone, look at our indicator window and we connect this, you will realize that we are having a typical divergence. And for divergence happening in this station, it signals a reversal to us. So we'll move to our 15-minute time frame. And here on our 15-minute time frame, price will always move in the same way inside of those stations. So you can see the movement of price now. So when it moves from this station all the way to this particular station, look at our commodity channel index, and then price came all the way down. So when price get to this station, this is the first movement. So we are waiting for price to move back to that zone for the second time. And this time around, this is how price moves. Price move came back to this zone. And what do we want to see? We want to see a candlestick formation. And inside of this zone, you can see that we have a bullish candlestick formation. So here is our bullish engulfing candle. And our commodity channel index is at the level of 10 and 20. And from there, we have this movement that begins to the upside. And immediately we got that movement. All we need to do is that we now make a new track on this time frame, which is our trend line. And this track begins to the upside. So you can see now how price move in this track all the way to the upside. And here inside of this track we have a bullish chart pattern formation which validates our next entry, a continuation to this upside. And here price break out of it. Here becomes another entry. Why? Because we know that price is moving towards a station, and this station is here. So when price get to this station, we obviously need to exit our trade, right? So price get to this station at M15 time frame, and then we exit because we know that this is a resistance zone, and this is the station where price left the support zone and price is going to. So immediately price get to this zone, we exit. So what is the next thing we are looking out to? We are having a tendency of price reversing or breaking through this station to continue to the other side. And what do we have? Carefully look at this. Price gave us a signal. And look at our indicator window. This is a divergence. So immediately we spot this divergence. We have this rejection, first candle, second candle, and then this bearish engulfing candlestick pattern. So we'll have our entry at the close of this. Our stop loss is up here. And again, very sorry, this chart is looking rough now. And again, we connect our trend line. And you can see the movement of price from that station to this station. So this trend line now, it implies that if price break out of this trend line, we will exit our trade. If at any point without getting to this station, somewhere here price decide to break out of it, we will definitely exit our trade. But here price break, retest this, and it continue to the downside. So if you are to make your entry without considering this divergence at the candle formation at our resistance zone, and you want to use a break of trend line, you can use this. Price break out of this trend line, retest it, and it continues. So your entry would have been here, your stop loss is here, and this is a move to the downside. Okay, so having established that, look at again, price came back to this station. So look at what happened. Immediately price get to this station, what do you see? Look at this. We have this, and then we have this. Another divergence inside of this station. So what do? We now look for a candle formation, and here we have a rejection of a candle, which is this, and then we have this bullish movement. And of course, where this trend line was broken, if you didn't make your entry based on these rejections at the break of this trend line, you make your entry and then you connect your trend line again. Trend line being connected and you are in this trade. So now price has break out of this trend line. So what do? You can exit this trade, and if you enter with a big lot, why should you have exited this trade? Look at this signal here. You see this? You see this? Another divergence. So you would have exited this trade here, and then now price has break out of this trend line. So probably we can have this retest, and then price will continue to the downside. And immediately that is happening, we know that price is probably coming to this station again before it will move to the upside. I believe you have learned something new. Watch this video over again. Thank you for watching, and don't forget to give this video a like, share, subscribe to the channel, ask your question using the comment section, and see you in the subsequent video.